Hello everyone, my name is Begima Ismailova, and in this video I will explain exercise 6.8 chapter 6, and after that problem 6.3. Here we have the chapter of recording bad debts. In this exercise 6.8, I'm working with Sorter PLC, and I need to write off uncollectible account. I will show how to record the write-off and how it affects the company's accounts receivable and how it affects the cash realizable value. Here I put the problem, the exercise. Let's start by understanding the question. At the end of 2025, Sorter PLC had total accounts receivable of 900,000. The currency is, I think, the South African currency, and allowance of debtful account ADA for 40,000. Then on January 16, 2026, the company determined that its receivable from Ordnance Orchards worth 80,000 would not be collected. So the company decided to write this sum off. The point is to do these requirements. So I will prepare the journal entry for write-off and calculate the cash realizable value before and after write-off. So let's do this. Here I have the company name. So before we record anything, let's remember that what the write-off is. When we write off a receivable, we are removing it from our account receivable balance. We do this because we know how we will not collect the money. But we also reduce the allowance for doubtful accounts since that account was created exactly for this kind of loss. So we write the fact that we write off doesn't create a new expense. It just use up part of this existing allowance. So let's start with requirement A. I'll write it here. Let me bold it. The requirement A. Here I have to it was Zoom. Okay, here I have to record the journal entry. In the journal entry, I will debit the allowance for doubtful accounts for 8,000. I do this because the company is using part of that allowance. Let me start with this. I want to use the currency of dollars. I think it's not a big problem to me. We have the currency. Okay, it's okay. And here I will debit account receivable for Ordonez for 8,000. So I will remove this amount from the customer's account. Crediting account receivable Ordonez. Okay, here we have the currency 8,000. Okay, so that was the requirement A. let me continue with the requirement B. Oh. So here, journal entry. Here, the account before write-off. For us to understand. So let's move to the requirement B. Here I have to calculate cash realizable value before write-off. Here I should put the gross accounts receivable as 900,000 and write the information about other, which is 40,000. I'm not doing it fast because I'm reading the information. And here other. And here, so the net account receivable or cash realizable value was 860,000. This is the amount the company expected to collect in cash. But before writing it down, I should show how I got it. Here is the answer. It is 40,000 divided by 900,000. Oh. Okay. Let me write it like this. The Excel on iPad is kinda not really comfortable, but I'm trying my best. What is wrong? What if I write it like this without the currency? Okay, now we got it. We got it in a number, but in a percentage it would be 4%. Minus, right? Minus 4%. Okay, so I'm sorry for taking time, but I was trying to make it as better as possible. And here, net account receivable. So net account receivable, also called cash realizable value, will be 860,000 that I was talking about. This is the sum of gross account receivable and other. Yeah, here we got the answer. Yeah, that's it. Let me bold it. And bold this one. So let's move to requirement C. I'm sorry if I'm being a little bit slow because I'm not using my laptop now. I'm using iPad. But on iPad it's also possible. So I'm proving it. So trying new things, after write-off. I love bolding. Okay. So now we are moving to requirement C, calculating cash realizable value after write-off. After we remove ordinance 6,000 receivable, the gross account receivable becomes how much? Let's see. Let me write gross account receivable. Here we calculate according to the requirements, as we have to remove ordinance 8,000. We wrote it down. So it will be 900,000 minus 8,000. So, it is 892,000. Okay. Actually, there should have been the sign, the dollar sign or the currency sign, but here I don't have it. But that's not a big deal. Let's continue. Here we have to calculate again the account receivable minus ADA. No, I will do this later. Before, I have to calculate the allowance for doubtful accounts that decreases to 30,000. So let's calculate it. As it was plus 8,000, you will see this one. So here's the decrease for 32,000. Now let's calculate net account receivable for after write-off. It should be the same as before write-off. It will be the sum of gross account receivable and ADA. Okay, and here it is C28. So it is 860,000. Let me bold it. Okay. Here I want to color them so we can definitely see the answers. So requirement B, requirement C, and requirement A. And that is it. It's still recording, so we can move to the second one. Problem 6.3. Problem 6.3. Bad debt reporting aging. Why did it move so far? Okay. Let's start it. So let's go step by step. We have the information for Manila Corporation, and at the end of the year, the company had total account receivable of 555,000 and existing allowance for doubtful accounts, credit balance of 40,000. It is before adjustment. And we have the aging schedule showing how long the accounts have been outstanding and about their probabilities of collection. So I will create the aging schedule in Excel here. And I have to do this to calculate how much of each group is expected to be uncollectible. So it means how much we think customers won't pay. So we calculate the bad debt reporting aging. So here is the company name. Let me write down the schedule. I'm just writing down the information that we have. here are the percentage of collectibility and amount. Okay, here is less than 16 days. Here is from 16 to 30 days. Here is 45 days. Here is from 46 till 60 days. And here is 61 till 75 days. And the last one, over 75. Okay, here's the balance. The amount is in dollars. Let me write it without currency because as you had seen on my iPad, it cannot calculate if there's currency. So 300,000, 100,000, 80,000, 40,000, 20,000, 15,000. Here the percentage of collectibility, it is 98, 90, 85, 80, 55, and 0. And here we will start calculating the amount. Here is the formula. AR balance is, and here 1 minus the collectibility. Let me see. No. Here. Oh, great. So it worked out. It is 6,000 for the first one. And the same we will do with all of the amounts. Equal to 6. 1 minus 6. Oh, great. Equal to multiply it by 1 minus this. Okay. No. Multiply it. Multiply it 1 minus this one. Okay. Equal to this AR balance for over 75 days multiplied by 1 minus percentage of collectibility. So here are the amount answers. And here I want to calculate the sum of the amounts. The sum is 60,000. And here I have to calculate the sum of account receivable balances. Oh, no, that's sum. Okay. What happened? Okay, the sum is 555,000. What would happen if I just write the currency here? Okay. Again, I'm saying that I always calculate it on my laptop, but now I'm using my iPad. So I have calculated the amounts and the AR balance accountability. Let's move to the requirement A. On the requirement A, what should we do? What's the appropriate balance for ADA at year end? The most appropriate one is, so here's the answer, 60,000 for the date of 31st, okay? The appropriate balance for ADA is 60,000 at year end. Okay. And requirement B. For the requirement B, I have to show how accounts receivable will be presented on the statement of financial position. So it will be presented like this. I have to write down the gross account receivable. So it is equal to this account, and we have to calculate the other by debiting the 60,000. This minus minus this one. And here we have the net account receivable, which is equal to the sum of these two, of gross account receivable and other. Not other, but like calculating of other. So the answer is 495,000. Okay, it was requirement B. Let's move to requirement C. So this total okay. Okay, just let me move to the requirement C, and after I finish, I will explain. On requirement C, I have to show what is the dollar effect of the year-end bad debt adjustment on the before tax income. Okay, we have to debit before. Okay, it is equal to 6,000 minus 60,000 minus 40,000, which is 20,000, and we have to credit that. Just equal to this. So I wanted to explain this to you. So the total, which was 60,000, represented the estimated amount of receivable. It shows how the company does not expect to collect it based on aging analysis. And to determine this year-end adjustment, we had the allowance for doubtful accounts already. It already had 40,000 credit balance, but we needed it to be 60,000. Okay, so we have to calculate it, and we credited other, and the sum. So therefore, the company has to increase the allowance by 20,000. So this 20,000 will be recorded as a bad debt expense. Okay. I also can prepare the adjusted journal entry. Here you can see it. We debit bad debt expense at 20,000 and credit allowance for doubtful accounts for 20,000. In this entry, I recorded the estimated uncollectible accounts for the period and increase of allowance account to the required balance. We had 60,000 and it had to be 40,000. And it follows the matching principle, and it means we recognize the expense in the same period as the related sales. After this adjustment, we can show accounts receivable in the statement of financial position. So gross account receivable 555,000, and less allowed for less for other, and here we had the 495,000. Okay, it was problem 6.3 on manual corporation, and I had prepared the entries for all three requirements. Thank you for watching. To summarize, I used the aging method to estimate the uncollectible accounts, and I required the ending balance for other, which was 60,000, and adjusting entry increased by 20,000, and at the last, the net account receivable was reported for 495,000. I can also show it like this. And that's it.